Hello everyone, welcome back to our channel. In this video, we will be discussing the various ways in which costs are classified. Now, classification of cost is important because there is no one way of classifying the costs that caters to all the decision-making requirements of the management. Let us quickly look into the different ways of classifying costs. On the basis of elements of a product, cost can be classified as material cost, labor cost, and overheads. Now, materials are those items from which the final product is made. When it comes to labor, it is the human efforts which are expended to convert the materials into finished goods. And overheads are all other costs other than material cost and labor cost. Okay, so overheads are also called as indirect costs. Okay, now material cost can be classified as direct material cost and indirect material cost. Similarly, labor can also be classified as direct labor cost and indirect labor cost. Now, direct material costs are those costs which can be easily identified with the product. Okay, you can allocate the cost of the materials directly to the product. In such cases, we call it as direct material cost. Like, for example, in case of garments, we say cloth is the cloth that is used for manufacturing this garment will turn out to be a direct material cost. When it comes to indirect materials, these are the materials which cannot be easily identified with the cost units. Like for example, nuts and bolts. When it comes to a furniture, maybe the wood that is used in the furniture turns out to be direct material cost because it can be directly attributed to the product. Whereas in case of the nuts and bolts that are used, or maybe the gum that is used, or maybe any other, the oil, or the varnish that is used for the furniture, the paint that is used for the furniture, all this will turn out to be the indirect material costs. Okay. In similar lines, labor cost can also be classified as direct labor cost and indirect labor cost. Now, all those wages that are paid to the workers who are directly engaged in converting the raw materials into finished goods is known as direct labor cost. Okay, and when it comes to indirect laborers, these are not directly engaged in the production operations, but they are the ones who will assist or help in the production operations. Like you talk in terms of supervisors, or maybe clerks or watchmen. Now, all those expenses paid to such a category of workers will turn out to be indirect labor cost. All other costs other than material and labor are treated as overheads, or the other name for overheads are indirect expenses. So indirect expenses are those costs that cannot be directly identified with a particular job or work. They are the costs that are incurred commonly for various activities, like for example insurance, or maybe advertisement costs, or rent of the building. All these are called as indirect costs, or they are called as overheads. Another way of classifying is on the basis of relationship to production, relationship of the cost to the production. On this basis, the cost can be classified as prime cost and conversion cost. If you add direct materials plus direct labor, direct material cost plus direct labor cost, and if you add direct expenses, we will get the prime cost. Okay, so the relationship of this cost to production is such that all these costs are directly related to the product. So direct materials plus direct labor plus direct expenses will give the prime cost. Now, conversion costs are the labor and overhead costs that are incurred to convert raw materials into finished goods. Okay, such costs are called as conversion costs. Moving ahead, on the basis of relationship to volume, costs can either be classified as fixed costs or variable costs or mixed costs, or it can also be called as semi-variable cost or semi-fixed costs. Now, what are fixed costs? These are the costs that remains same for a specific range of activity for a specific time frame. Okay, so suppose in case if you're spending rupees 1 lakh for manufacturing 10,000 units, Okay. And if you're spending the same amount for manufacturing 20,000 units as well, that means to say this component of cost is a fixed cost. So irrespective of how many, what is the volume of production or how many units you're producing, this cost will remain the same. Such costs are called as fixed costs. It does not change as per the volume of production. On the flip side, variable costs are those costs which tend to change in direct proportion to the volume of output. That means to say, if you're producing 10,000 units, if the cost is rupees 1 lakh, and for producing 20,000 units, if you're spending 2 lakh rupees, that means to say the cost is increasing in direct proportion to the increase in volume of output. Now, such costs are called as variable costs. One of the characteristic feature of variable cost is that cost per unit will remain the same. Okay, whereas the total cost will change. Now, that is a characteristic feature of variable cost. Opposite is the case in case of fixed cost. In case of fixed cost, the total cost remains the same, will be the same, whereas cost per unit will vary, it will change. Okay, so those costs which does not change with the volume of production is called as fixed cost, and those costs which changed with the indirect proportion to the volume of commodities produced is called as variable cost. Then we have this mixed cost, which can be either semi-variable cost or it can also be called a semi-fixed cost. And then we also have step cost. So what is semi-variable cost? Now, semi-variable cost is a mix of, it is partly fixed and partly variable. So some portion of the cost is fixed and some portion of the cost is variable. Now, such costs are called as semi-variable costs. It will have a fixed component below which it will not fall at any level of output. Like, for example, telephone bills or electricity charges. You have something called as minimum charges, right? So, this component, this minimum charge component is fixed portion. And according to the usage of, maybe the telephone or maybe the usage of electricity, the other portion will change. Now that portion is called as variable cost. So semi-variable costs have got two components. One portion is partly, one portion is fixed and the other portion is variable. So it is partly fixed and partly variable. So the minimum charges or the minimum amount that has to be spent will turn out to be fixed portion of the semi-variable cost. Over and above whatever money is, has to be spent depending upon the usage will turn out to be the variable portion of the cost. That's why it is called as semi-variable cost. Now, another type of cost is called as step cost. Now, step cost is that for a particular range of production, the cost will change. Okay, and it will change in lump sum as production volumes increases or decreases. So these costs remain fixed over a relevant range of production volume, and for the next range of production it will change. So if you're plotting the step cost on a graph, it will appear like this. So let us say on the x-axis you have production or output, okay, volume of production, and on the y-axis you have the cost. Let us say this is 10,000 rupees. This is 20,000 rupees, 30,000 rupees, likewise. And let us say the production over here, the first is 100 units, then you have 200 units, 300 units, likewise. So let us say up to 100 units, the cost is 10,000 rupees. Okay, this point. If you want to produce 200 units, it will jump to 20,000 unit, 20,000 rupees. If you want to manufacture 300 units, the cost will now jump to 30,000 units. So it forms a step. That is why it is called a step cost. Any number of Commodities, that is any number of units that are manufactured between 0 to 100, you'll have to spend 10,000 rupees. For the next range, so if you're manufacturing 101 units to 200 units, you'll have to spend 20,000 rupees. So for this range, the cost remains the same. That is why it is called a step cost. Suppose from 201 to 300 units, if you want to manufacture any, let us say 250 units, still the cost will be 30,000 rupees. In case if you're producing 300 units, it will be 30,000. In case if you're producing 210 units, it will be 30,000. So for this range, the cost remains the same. That's why it is called as step cost. Now, on the basis of ability to trace, the cost can either be classified as direct cost or indirect cost. I've already told you when talking about materials, labor, and overheads, direct costs are those costs which can be directly attributed to the product, whereas indirect costs are those costs which cannot be attributed directly to a product. On the basis of departments where it is incurred, cost can either be production department cost or service department cost. So if the costs are incurred in the production department, it is production department cost, and if it is incurred in the service department, it will be called as service department cost. Then on the basis of functional areas or activities performed, cost can either be manufacturing cost, it can also be called as, it can be selling and distribution cost, or it can also be called as marketing cost. Then we have administrative cost and financing cost. The other name for manufacturing cost is production cost. So costs of all items that are involved in the production of a product or service, starting from purchasing raw materials to packaging the products. Okay, starting from all those expenses, starting from purchasing raw materials for producing the product till it is packaged, all those expenses turns out to be manufacturing costs. Now, selling and distribution costs, it's also called as marketing costs. This includes all those costs which are involved in selling and distributing the commodity. Now, for example, salary or commission of the salesman, advertisement expenses, rent of showroom, all these are selling and distribution costs. And coming to administrative costs, these are the expenses that are incurred for general management of an organization. Like for example, we give remuneration to the directors. So generally, for the complete overall administration purpose, this money is spent. As such, it becomes administrative costs. Likewise, salary to the accountants, or maybe the telephone expenses, the stationery expenses, anything that is spent for administrative purposes will turn out to be administrative costs. Coming to financing costs, these are the costs which are related to the borrowing of money, the interest money that is being paid. Okay, any interest that is paid or other costs that are incurred or that are involved in borrowing the funds turns out to be the financing costs. Another basis of classification is depending upon the period charged to income. As such, this cost can either be product cost or it can be period cost. Now, product costs are those costs that are required for the production, and this will not be incurred if there is no production. Okay, only when there is production, these costs are incurred. If there is no production, these costs are not incurred. Okay, now such type of costs are called as product costs, and the usual examples for product costs are direct materials, okay, direct labor, direct materials, direct labor, and factory overheads. These are called as product costs. So if production is not there, these costs are not incurred. If production is there, these costs are incurred. So based upon the period charged to income, the cost can also be period costs. Now, period costs are indirect costs that are incurred in production, and these are incurred even if there is no production. Whether there is production or not, these costs have to be incurred. And since it is a period cost, it is charged to the profit and loss account. And as you all know, profit and loss account is prepared for a particular duration. Usually, it is for one financial year. So all those costs that are charged for to the profit and loss account, irrespective of whether there is production or not, are called as period costs. Examples can be again office and administration expenses, or you can talk in terms of marketing expenses. All these are the expenses that can be treated as period costs, and it is charged to profit and loss account. On the basis of manager's relevancy of decision making and analysis, costs can either be standard and budgeted costs or controllable and non-controllable costs. committed and discretionary fixed cost, relevant and irrelevant costs, differential costs, opportunity costs, and shutdown costs. Standard costs are established costs. So it is a cost that the organization already knows well in advance. Beforehand only it knows that this much is the amount that it has to generally spend per unit. As such, it forms as a yardstick so that the organization can frequently measure its efficiency. When actual costs are incurred, you refer whether the actual costs that are incurred are less than the standard cost. Okay, if the actual cost incurred is less than the standard cost, that means to say the organization is efficient in its cost control. But in case if the actual cost exceeds the standard cost, that means to say control has to be exercised and the costs have to be brought down. Okay, so standard cost provides a yardstick to measure the efficiency with which the actual cost has been incurred. Now, budgeted costs, it is an estimate of expenses that the company expects to meet in the future. So the word itself says it is an estimation of expenses, how much the company is planning to spend on a particular item in the near future. That will turn out to be budgeted cost. Going to the next classification, controllable and non-controllable costs. Controllable costs are those costs where the manager can exert significant control, and as such, they can see to it that, I mean, they have the option of either increasing or decreasing because these costs are under their control. Example, traveling expenses of the employees. Okay, so if in case if they feel that the money is being spent more on traveling expenses, the managers can cut down on the travel expenses. Okay, they can curtail the traveling expenses. That's why they are called as controllable costs, since it is under the control of the manager. But opposite is the case in case of non-controllable costs. These are the costs which the manager has very limited span of control, like for example depreciation is a cost which does not come under the control of the manager. That amount has to be spent, it has to be, sorry, not spent, it has to be deducted because the assets have been used in that particular financial year. Okay, likewise any allocations that are done to corporate offices, now these type of expenses turns out to be non-controllable costs. The next classification is committed fixed costs and discretionary fixed costs. Now, committed fixed costs are those costs that are incurred as a result of commitment of the organization in particular fixed assets. Okay, either fixed assets or any other long-term requirements of the company. Now, this arises because the organization wants to create a capacity, production capacity. Like, for example, when you are investing money in fixed assets, you are planning to spend money on fixed assets because you want to expand your volume of production. Those costs are committed costs. There is no question of going back because there is a goal to be achieved over here. For example, fixed assets. When you're purchasing fixed assets, along with fixed assets, there is a cost involved, that is depreciation. When you're buying a fixed asset, it is a cost that is committed towards depreciation. Okay. Also, insurance. You buy insurance on fixed assets. When you're purchasing a fixed asset, already you are committed to these type of costs. Such type of costs are called as committed costs. So whether there is production or not, these costs are incurred. Now, talking about discretionary fixed costs, they are at the discretion of the management. So, these are the costs which are at the discretion of the management, and they are the ones who decide whether these costs have to be incurred or not. Like, for example, training expenses of the employees. Whether money has to be spent to train the employees or not is at the discretion of the management. Okay. Likewise, money to be spent on research and development. It is at the discretion of the management whether they want to spend money in this year or next year, this month or next month. Another classification is treating the costs as relevant costs and irrelevant costs. So, what are relevant costs? These are the costs that is relevant while making a decision. Okay. Um, Relevant for making a decision in the sense the decisions that are made are affected by these costs. Depending upon these costs, the decisions are made. As such, these costs are absolutely required while making the decision. These costs are to be absolutely kept in mind while taking the decisions. In short, decisions are taken on the basis of these costs. That is what is called as relevant costs. Now, irrelevant costs are those costs that are not affected by any decisions. Okay, as such, when the decision is taken, these costs are not taken into consideration, since it is irrelevant. It is not at all connected in the decision making process. So the cost can also be classified as relevant, which is required for taking decisions, and irrelevant costs. Another classification of cost is differential cost. Now, differential cost is the difference between two options. Let us say, for example, the business has to take up and it requires a particular asset. So, the business will have two options, either to buy the asset or it can lease the asset. Okay, if it buys, it becomes the owner of the asset. It gets all the ownership rights on the asset, and thereby gets the benefits of ownership. Whereas if in case if it goes for leasing, it has to pay lease rentals, but there are again benefits on for leasing as well. So depending upon the decision that is taken in this case, the difference in the total cost, okay, between buying option and leasing option, this is what is called as differential cost. Okay, so it is a difference in the total cost of two options when it is compared. So what is the cost involved in buying and what is the cost involved in leasing? You make a comparison. That cost is what is called as how buying is different from that of how the buying costs are different from that of leasing costs. This difference, what we look into, is called as differential cost. So you make a comparison and then find the difference between these two options. That cost is what is called as differential cost. The next one is opportunity cost. So opportunity cost is the cost of foregoing the next best alternative. Now this is a cost that is taken from the economics, from the field of economics. So economists usually talk in terms of opportunity cost. It is the concept, wherein when you're opting for one option, okay, you're foregoing the chance of taking up another option. Okay, so you're foregoing the next best alternative. That is what is called as opportunity cost. That cost that is foregone by choosing one option over the other option. That is what is called as opportunity cost. Then comes the shutdown costs. When it comes to shutdown costs, these are the costs which are incurred when the organization takes the decision of stopping the manufacture of a particular product, or maybe shutting down a particular department or a division. That's all for now, students. Hope you all had a pleasant learning experience. Please don't forget to hit that like button and subscribe our channel and share it with your friends. See you all in the next video. Thank you.